students, in present video I am going to explain about ninth problem from consignment accounts topic. I am making this video for degree students. Previous videos links are available in the description box. Let us see the question first. On 1st April 2021, the consignment to Tirupati account in the books of Classic Watchmakers, Chennai, showed a debit balance of 3,750 rupees. This represents invoice price of 50 clocks at a 25% above cost. On 7th April, they sent another 2,500 clocks at a pro forma invoice price of 75 rupees each, which was 25% above cost. Their expenses are 3,000 rupees. Murali received the clocks on 21st April and paid for clearing 2,000 rupees. On 15th June, he returned 30 clocks being defective. He paid freight and insurance 100 rupees. By the end of 31st December 2021, Murali sold the opening stock of 50 clocks at 85 rupees each and 2,400 clocks of the remaining at 90 rupees each. His expenses were advertising 2,000 rupees, salaries 1,000 rupees. Murali's commission is 8% on sales. On 5th January 2022, Classic Watchmakers received the check for the amount due from Murali and incurred bank charges of 300 rupees for collecting the check. The amount was credited by bank on 9th January 2022. Write up the consignment account, finding out the profit or loss on consignment, Murali account, provision for expenses account and bank account in the books of consignor, recording the transactions up to the receipt and collection of the check. This is the question. Let us see the solution for this. Important points of the problem I have written on the board. See, Classic Watchmakers are doing their business in Chennai. So their agent is Murali. Murali is living in Tirupati. Classic Watchmakers send goods to Murali on consignment basis. So in favor of Classic Watchmakers, Murali sell these goods in Tirupati. So from sale proceeds, he deducts his expenses, commission and the remaining amount he sends to Classic Watchmakers. So this is the agreement between Classic Watchmakers and Murali. So this is consignment business. Here Classic Watchmakers is known as consignor. Murali is known as consignee. So with the consignee, already some opening stock is there. Means before 1st April 2021, already consignor sent some goods to consignee on consignment basis. So after sales with the consignee, 3,750 worth goods are there on 1st April 21. How many clocks these are? 50 clocks. And in question clearly is giving that this value is invoice price. So invoice price, cost price. Concept I explained in previous problem, 8th problem. When consignor is sending goods to consignee, consignee should know at what price he has to sell these goods. So consignor mentions that price in pro forma invoice. If he mentions cost price in that, consignee will come to know about his profit. So he may demand for more commission or he may become a competitor to us. So consignee should not know our correct profit. In that case, in pro forma invoice, instead of mentioning cost price, consignor mentions a price which is higher than the cost price. That price is known as invoice price. And in question is giving that this 3,750 is invoice price. And how it is fixed? 25% on cost price. Next, on 7th April 21, consignor sent 2,500 clocks to Murali on consignment basis again. And one clock invoice price is 75 rupees. And how it is fixed? Same, 25% above the cost price. Then to send these goods, to send this 2,500 clocks, consignor incurred 3,000 rupees expenditure. Then consignee received these goods on 21st April 21. And to receive these goods, consignee incurred some expenses. Clearing charges 2,000 rupees. Then on 15th June 21, consignee returned 30 clocks to consignor because these goods are defective. And to return these goods, consignee incurred Freight and insurance expenditure 100 rupees. By 31st December 21, consignee sold opening stock 50 clocks at the rate of 85 rupees each, and the consignor sent 2500 clocks now. In that, 2400 clocks are sold for 90 rupees each. Next, to sell these goods, consignee incurred some expenses. Advertisement 2000, salary 1000. On sales, consignee is entitled to a commission of 8%. Next, on 5th January 22, means next year, consignee has to pay the final due amount to consignor. No? For that amount, consignee issued a check. And to encash this check, consignor spent 300 rupees bank charges. Bank allotted that money on 9th January 22 and it was credited in consignor's bank account. So this is the question. For this, in consignor's books, he is asking us to prepare consignment account, consignee account, provision for expenses account and bank account. In previous problems, we used to prepare ledger of consignor and consignee. But in present problem, he is asking only ledger of consignor. In previous problems, in consignor's books, we used to prepare consignment account, consignee account, third account is goods sent on consignment account. But here clearly is asking which accounts we have to prepare. Consignment account, consignee's account. Next, no need to prepare goods sent on consignment account. Provision for expenses account and bank account also he is asking. So let us start the solution for this. Ledger of classic watch makers, in brackets consignor. First account is Tirupati consignment account. Consignee is living in Tirupati now. Therefore, with the consignee's area's name, we have to open this account. So consignment account is a nominal account. This account is prepared to know the profit or loss in this business, in consignment business. Therefore, nominal account rule we have to follow while preparing this account. Nominal account rule is debit all expenses and losses, credit all incomes and gains. So consignment business related expenses and losses we have to show on debit side of this account. Consignment business related incomes and gains on credit side. In question, dates are available. Therefore, date column also we have. Date, particulars, amount, date, particulars, amount. First, what happened? Opening stock 3750. Recollect previous problems. He used to give closing stock. Closing stock always on credit side of consignment account we show now. So, opening stock on debit side. Debit side, what to write for that? Recollect, for closing stock, what we used to write? Buy consignment stock. For opening stock also same. To consignment stock account. 3750. In previous problem also explained. When invoice price, cost price, both are given. Goods sent on consignment, unsold stock values. We have to show it invoice price now. Opening stock also same. So when opening stock is available in the question and when invoice price, cost price both are given, then opening stock we have to show at invoice price, because we should remember which price we wrote in pro forma invoice to mislead the consignee. Opening stock is on which date? 1st April 21. In date column write down that. Next, what happened? On 7th April 21, consignor sent goods to consignee on consignment basis. So when goods sent on consignment, debit side we should write now. Date is 7th April 21. What to write? To goods sent on consignment account. How many clocks are sent? 2500. One clock invoice price is 75 rupees. So 2500 into 75. 1,87,500. So what is the journal entry for this? In consignment account, debit side we posted. So entry is Tirupati consignment account data to goods sent on consignment account. So goods sent on consignment account we are not preparing in this problem. Therefore, you need not to show second time posting. Next, consignor expenses 3000 rupees. In consignment account, debit side we have to show expenses, no? 3,000 rupees. What to write in particulars column? If consignor pays this 3,000 in cash form, you have to write to cash. If he pays through a check or DD, you have to write to bank. My assumption is he paid this expenditure in the form of a check. Therefore, I am writing to bank account. Date. When we send goods, on that day only we incur this expenditure, no? Therefore, for this 2000 also, write on the same date, 7th April 21. Next, consignee received these goods on 21st April 21. While receiving the goods, he incurred 2000 rupees clearing charges, expenditure. So, for consignment business, expenditure, debit side we should show now 2000 rupees. When? On 21st April 21. For consignor's expenses, we wrote to bank. For consignee's expenses, consignee's name we should write. Consignee's name is Murali. To Murali account. So what is the logic behind writing Murali account, consignee's name? In previous videos I explained. So what is the journal entry for this? In Tirupati consignment account, debit side we wrote to Murali. If you want to post like that, entry is Tirupati consignment account data to Murali account. We are preparing Murali account also. So in Murali account also we have to post this entry. Murali account is created in the journal entry. Therefore in Murali account credit side we should post. In date column, 21st April 22 by debit account name. In entry, debit account is Tirupati consignment, no? Write down that. By Tirupati consignment account, 2000 rupees. Next, on 15th June 21, consignee returned 30 clocks to us. When goods are sent, debit side we are writing to goods sent on consignment. When goods are returned, credit side we should write. In particulars column, you have to write the same account name. Goods sent on consignment account. Returns date is 15th June 2021 by goods sent on consignment account. 30 clocks are returned. 30 clocks into, while sending these goods, we recorded at invoice price now. In case of returns also at invoice price only we should show the value. Therefore, 30 clocks into 75 rupees each. 30 into 75, 2250. Next, to return these goods, consignee incurred 100 rupees expenditure, freight and insurance. When? On the same day, 15th June. Expenditure in consignment account debit side we should write now. Date is 15th June 21. Expenditure is incurred by consignee. Then we have to write consignee's name here. To Murali account, 100 rupees. So what is the journal entry for this? Tirupati consignment account to Murali account. In Murali account also, it will be posted on credit side. 15th June. See, for first transaction, year is not 22, this is 21. Here also same, 21 by Tirupati consignment account, 100 rupees. Next, by the end of the year, by 31st December 21, consignee made sales. Sales for consignment business, income. Income credit side we should write. Date is last date of the year, 31st December 21. For sales, what to write? Murali. By Murali account. Opening stock, 50 clocks are sold at the rate of 85 rupees each. 50 into 85 is equal to 4,250 in inner column. 2,400 clocks are sold at the rate of 90 rupees each. 2,400 into 90 is equal to 2,16,000 rupees. Total in outer column, 2,20,250 rupees. What is the entry for this? In consignment account credit side we wrote Murali. So entry is Murali account data to Tirupati consignment account. In Murali account debit side we have to post the same. Date is 31st December 21. to Tirupati consignment account. Sales amount 2,20,250. Next, to sell these goods, consignee incurred 2,000 plus 1,000 expenditure. Expenditure in consignment account debit side now. When consignee incurred this by the end of 31st December 21. Therefore, 31st December 21. For consignee's expenses, we have to write consignee's name. To Murali account. Two expenses he has given. Advertisement 2,000 plus salary 1,000. Total 3,000 rupees. Entry Tirupati consignment account to Murali account. In Murali account, credit side. Date is 31st December 21 by Tirupati consignment account. 3,000 rupees. Next, consignee's commission 8%. So consignor has to give commission to consignee. For consignment business, this commission is expenditure. Expenditure debit side we should show. When date is same, 31st December 21. For consignee's commission also we have to write his name. To Murali account. Commission we have to calculate on sales. Sales amount 2,20,250 on that 8%. 8 by 100. 17,620 rupees. So what is the entry? Tirupati consignment account to Murali account. In Murali account credit side we have to post same day by Tirupati consignment account. Commission amount 17,620. So everything we are recorded in accounts. Finally, we have to see the unsold stock calculation. Let us see how many clocks are unsold. So first working note says unsold stock quantity. In units, number of clocks. First one, opening stock. 50 clocks are there with us. So opening stock 50 clocks plus quantity sent. Consignor sent 2,500 clocks on consignment. So 2,500. Opening stock plus quantity sent. Total 2,550. Then consignee returned 30 clocks to us. That you have to minus. Return minus. Then remaining clocks 2,520. Consignee sold opening stock 50 clocks plus in this 2,500 consignee sold 2,400 clocks. So sold clocks are 50 plus 2,400, 2,450. Then unsold clocks with a consignee is 70. So unsold stock quantity is 70 clocks. Now this 70 clocks value we should calculate. Second working notes, unsold stock value calculation. Invoice price of unsold stock first we should consider. Why invoice price? Because observe this value 1,87,500. This is goods sent on consignment. 2,500 clocks at the rate of 75 rupees each. Invoice price. So while writing sending the goods on consignment, invoice price we considered. Therefore, unsold stock also we have to calculate at invoice price only. Therefore, 70 clocks are unsold. 1 clock invoice price is 75 rupees now. So 70 into 75, 5,250. To this, proportionate direct expenses of consignee we should add now. So consignment business related expenses are of two types, direct, indirect. Direct expenditure means on these goods only for one time they incur. Indirect expenditure means on the same goods again and again this expenditure will be incurred by consignor and consignee. Consignor expenditure 3,000. So only for one time consignor incurs this expenditure. Therefore, that 3,000 is direct expenditure. If you carefully observe, consignor incurred other expenditure also. See, bank charges 300 rupees. So final due amount, consignee paid to consignor by issuing a check. So to encash that check, to get the money on that check, consignor incurred 300 rupees expenditure. So these 300 bank charges are not related with these expenditure. No? So while calculating unsold stock value, this 300 we need not to consider. So on these goods, how much expenditure consignor incurred, that only we should consider. So on 2500 goods, consignor incurred 3000 rupees. So in 2500 only, we have this 70 unsold stock now. Therefore, while calculating unsold stock value, 70 clocks value, on 2500 consignor spent 3000 rupees, that amount only we should consider. So consignor direct expenditure on 2500 clocks is 3000 rupees. But we should not take that 3000 rupees here because we are calculating unsold stock value now. Unsold stock quantity is 70 clocks. So in this 3000, 70 clocks related expenditure only we should consider. That is why we wrote a proportionate word. So question is, on 2500 clocks, if a consignor direct expenditure is 3000 rupees, on 70 clocks, consignor direct expenditure is how much? How to calculate this? 3000 divided by 2500 into 70, 84 rupees. Next, proportionate direct expenses of consignee, Murali. On 2500, consignee spent 2000 clearing charges, and to sell these goods, consignee spent advertisement expenditure 2000, salary 1000. So here advertisement, salary both are indirect expenses because on same goods again and again this expenditure will be incurred. Clearing charges is direct expenditure. So that direct expenditure we should consider. And see this one, 100 rupees. This expenditure is also incurred by consignee only. But while returning these 30 clocks, he incurred this 100 rupees expenditure. So this 100 rupee expenditure is not related to unsold stock now. Therefore, while calculating unsold stock value, don't consider this 100 rupees. Even though it is direct, you should not consider. Now, 2000 divided by 2500 into 70. Because 2000 rupee is spent on 2500 clocks. We want 70 clocks related expenditure. So on 2500 clocks, if a consignee's direct expenditure is 2000, on 70 clocks consignee direct expenditure is how much? 2000 divided by 2500 into 70, 56 rupees. Add these three amounts, 5390. 5390 is unsold stock value. Unsold stock on credit side we should write. When we are calculating at the year end, 31st December 21. For unsold stock what to write? By consignment stock account. Unsold stock value in outer column 5390. Next come to loadings adjustment. This is opening stock 3750. This is invoice price no. So it is one misleading price no. To keep the consignee in dark, consignee should not know about our actual profit. That is why instead of mentioning cost price, invoice price we mention here. But what is the purpose of preparing consignment account? Consignor wants to know the profit or loss in consignment business. When he wants to know the correct profit or correct loss, correct values only he should consider. But 3750 is not a correct value. Cost price of opening stock we should write here, but we wrote invoice price of opening stock. So that the excess amount is known as loading. That loading we should cancel. So in opening stock there is some loading, that value we should cancel. Similarly, see this amount 1,87,500. Goods sent on consignment 2,500 into 75 we did. 75 is also invoice price of 1 clock now. Actually cost price we should consider here, then only correct value comes. So even this value is also not correct. Here also there is one loading, that amount we should cancel. Next, come to unsold stock calculation. So while calculating unsold stock, we considered invoice price which is wrong. If you want to know correct profit or loss in consignment, here also cost price only we should consider. Therefore, there are three loadings in this problem. in opening stock, in goods sent on consignment, in unsold stock value. So these three loadings one by one we should cancel. So debit side loading if you want to cancel, you have to write on credit. Credit side loading amount if you want to cancel, you have to write on debit. First, we will cancel the loading in this amount. Opening stock loading. Working notes 3. Loading in opening stock. See, 3,750 is invoice price now. And in question, what is giving this invoice price is 25% on cost. Means, if a cost is 100%, then invoice price is 100 plus 25, 125%. So 125% value we know 3,700. Based on that, cost price we can calculate. Question is, if invoice price 125% is 3,750 rupees, then cost price 100% is how much? 3,750 divided by 125 into 100. If you do this, 3,000 comes. So cost price is 3,000 rupees. Here, instead of writing 3,750, actually we should write 3,000. Cost price we should show. But we have written 3,750. How much extra we wrote? 750. This is called loading. Loading in opening stock. If you want to know correct profit or loss in consignment business, that loading we have to cancel. How to cancel that? By writing on opposite side, credit side. So loading is equal invoice price of opening stock minus cost price of opening stock is equal 750. Credit side we should write this 750. When we do these adjustments at the year end means 31st December 21. What to write for that? Recollect previous problems. In unsold stock, loading if you want to cancel, debit side we used to write to consignment stock reserve. Here also same account name. So in opening stock, if you want to cancel the loading, credit side you have to write by consignment stock reserve account. So what is the journal entry for this? Consignment stock reserve account at Tirupati consignment account. We are not preparing consignment stock reserve account now. Second time posting we need not to show. Similarly, for unsold stock, what is the journal entry? Consignment stock account data to Tirupati consignment account. So here also second time posting is not required because consignment stock account we are not preparing. Next come to loading in goods sent on consignment. Fourth working notes, loading in goods sent on consignment. See, 1,87,500 is invoice price now. So invoice price of goods sent on consignment is 1,87,500. How that value came? 2,500 clocks are sent at 75 rupees each. 75 is 1 clock invoice price. So 2,500 clocks into 75 rupees, 1,87,500. But in this 2,500, consignee returned 30 clocks to us. Therefore, for this 30 clocks, that invoice price we should not consider. So deduct 30 clocks related invoice price minus invoice price of goods returned. 30 clocks into 75 rupees each. Invoice price 2,250. So invoice price of 2,470 clocks is equal to 1,85,240. Now don't think that we have to calculate the loading of 2,500 clocks, because in 2,500 30 were returned, no. So finally we have to cancel the loading of 2,470 only. That is why we have calculated 2,470 clocks related invoice price. So 2,470 clocks invoice price is 1,85,250. And in question clearly is given this 75 rupee invoice price, how it was fixed? 25% above the cost price. Means if a cost price is 100%, loading is 25%. So invoice price is 100 plus 25, 125%. So 125% amount we know, 1,85,250. We want the cost price of 2470 clocks, then only loading comes, because loading is equal invoice price minus cost price. So cost price of 2470 clocks, cost price in percentage form 100, no. So if 125% is equal to 1,85,250, 100% is equal to how much? That is our calculation. So 1,85,250 divided by 125 into 100 is equal to 1,48,200. So actually speaking, here how much we should write? 1,48,200 for 2470 clocks. If returns are not written here, then, but we are written invoice price. So loading now we should cancel now. 2470 clocks invoice price 1,85,250 minus 2470 clocks cost price 1,48,200 is equal to 37,050 rupees. So this is the loading in goods sent on consignment. That loading you have to cancel now. So how to cancel? Debit loading amount if you want to cancel. Credit side we should write now. Credit side 37,050 rupees. When these loading adjustments we are doing at the year end. So date is 31st December 21. What to write in particulars column? In previous problems also we wrote. The loading in goods sent on consignment account we want to cancel. So reverse entry we have to pass now. What is the entry for this? Tirupati consignment account to goods sent on consignment. For this reverse entry, goods sent on consignment account to Tirupati consignment account. So Tirupati consignment account is created. Therefore credit side you should post. Buy goods sent on consignment account. So goods sent on consignment account we are not preparing. Therefore second time posting you need not to show. Opening stock loading is cancelled. Goods sent on consignment related loading also cancelled. Next which loading? Unsold stock loading. So unsold stock 5,390 is also not the correct value, because based on invoice price we have calculated this amount. Cost price we should consider. So here also some loading is there. That loading by writing on debit side we have to cancel. Loading adjustment we are doing at the year end now. So here 31st December 21. What to write for this? In previous problems I told, unsold stock loading when you want to cancel, you have to write to consignment stock reserve account. So let us calculate the loading in rough work. Fifth working notes, loading in unsold stock. See, invoice price of unsold stock first we should calculate. Unsold stock how many clocks? 70 clocks. Previously we have calculated. Working notes number 1. 1 clock invoice price is 75 rupees. So 70 clocks into 75 rupees. 5,250 is unsold stock invoice price. And in question he has given how this invoice price is fixed. 25% above the cost price. So if a cost price is 100%, then invoice price is 125%. 125% amount we know 5,250. Now we want to cancel loading in unsold stock. How to cancel that? Invoice price of unsold stock minus cost price of unsold stock. So cost price of unsold stock we have to calculate. If 125% is 5,250, then cost price of unsold stock 100% is how much? So 5,250 divided by 125 into 100 is equal to 4,200. So unsold stock cost price is 4,200. Now loading is invoice price of unsold stock minus cost price of unsold stock is equal 1,050. So in this amount 5,390, 1,050 is extra loading. That extra if you cancel, then only cost price comes here. So by considering cost price only we can calculate correct profit or loss. Therefore that loading, that extra amount 1,050 we should cancel now. So credit side loading if you want to cancel, debit side you have to write now. Debit side to consignment stock reserve account 1,050. With this 3 loadings are cancelled. Finally, come to this point. Bank charges 300 rupees. When these bank charges are incurred on 5th January 22, and this consignment account we are going to close on 31st December 21. So after this date, consignor spend the 300 bank charges now. You may think that 300 doesn't come in this account because after 31st December 21 they spend this money. But in question he is giving one hint to us. He is asking us to prepare provision for expenses account. So what is the meaning of provision for expenditure? For example, expenditure we are incurring on this date. Accounts we are closing on 31st December 21. Means that expenditure is related to 2021 year. But when we paid that money in 2022. So cash is going in 2022. But that expenditure belongs to 2021. So in 2021, while calculating profit or loss, you have to consider that expenditure. Even though amount is paid in next year, as that amount belongs to 2021, in 2021 only we should consider. But here you cannot write that expenditure we paid, because when we paid that expenditure in next year. So in next year cash is going. Then in 2021, how that expenditure is to be recorded? In the form of creating a provision for that expenditure. Thus, for this 300 rupees, in 2021, we have to create a provision. So this 300 is expenditure, no? Expenditure in consignment account, we said we have to consider debit side. So by seeing this a provision for expenditure account, we understood that this 300 rupees in current year only we have to provide, and while calculating consignment profit or loss, that 300 also we have to consider. That is why that 300 I am taking on debit side of consignment account. Why on debit side? Because you know the reason. Consignment account is a nominal account. Expenses we have to show on debit side. So debit side, that 300 rupees bank charges also we have to write it. Date is year last date. Because on that day only you are going to create provision for expenses account. What to write for this? Say provision for expenses account 300 rupees. So what is the journal entry for this 300? Tirupati consignment account to provision for expenses account. Second time posting is not required because provision for expenses account we are not preparing now. So everything we have taken in consignment account. Finally, we have to calculate the profit or loss in consignment business. So find out the totals of two sides. Credit column amounts total is 2,65,690. Debit column amounts total 2,18,320. Difference 47,370. Credit side we wrote incomes. Debit side expenses. Income is more than the expenditure. So finally in consignment business there is a profit of 47,370. This amount, debit side total is less. So debit side you have to show 47,370 when year last date 31st December 21. Consignment profit we have to transfer to profit and loss account. Therefore, for this answer, you have to write to profit and loss account. So, what is the journal entry for consignment profit? Tirupati consignment account to profit and loss account. Two sides, highest total 2,65,690. Credit side also same. Next, come to consignee's account, Murali account. Transactions posting is completed. Finally, we have to find out the balance. See, when consignee is giving the due amount to consignor on 5th January 22. But what is the account closing date? 31st December 21. So first on that day we have to close this Murali account. And this due amount in next year, consignee is going to clear. So next year details also we have to show here. Therefore, first we will close this account. Debit total is more than credit total. Consignee sold our goods for 2,20,250. From that, he deducts his expenditure 2,000, 1,000, 3,000, his commission 17,620, and remaining amount is the due amount from consignee. Debit total is 2,20,250. Credit amounts total 22,720. Difference 1,97,530. This is the due amount from consignee. So he is not paying that amount by 31st December 21. No? On that day, his account shows a balance. Therefore, credit side 31st December 21 by balance carried down. Amount is 1,97,530. Two sides put the debit total. 2,20,250. Credit side also same. In question clearly is asking that show the Murali account, bank account, provision for expenses account up to 9th January 22. That is why we are continuing this Murali account. Consignment account we can close on 31st December 21 because that due amounts, that is settlement, is not related with the consignment account. No? So that settlement details affect Murali account, bank account, provision for expenses account. So these three accounts, when you are preparing, next year details also we have to show. Balance carried on is coming on credit side. So next year you have to bring that on debit side. Next year date is next date of this date. If today's date is 31st December 21, then tomorrow's date is 1st January 22. On that day, bring the balance. What to write? To balance brought down 1,97,530. For this amount, on 5th January, he issued a check. So, on 5th January 22, credit side, we should write by bank account. Why? Because what is the journal entry for this? Murali is giving this due amount in the form of a check. So, money is deposited in our account. So, our bank account is a personal account. Bank account is a personal account. Personal account rule, debit the receiver, credit the giver. So he is depositing money in our account. Means our bank balance increased. So our bank is a receiver, debit the receiver. Therefore, we should debit bank account. Murali is issuing a check. Means Murali is a giver, no? Murali account is also a personal account. Personal account rule, debit the receiver, credit the giver. Murali is a giver. So we should credit Murali account. Murali account is credited. Therefore, in Murali account, credit side we have to post. What to write in particulars column? Debit account name by bank account. He paid this due amount. So 1,97,530 he paid. Write down the amount. Two sides put the totals. Account is closed. Next we have to prepare bank account and provision for expenses account. So next account is provision for expenses account. Here we posted 300 rupees now. What is the entry for this? Tirupati consignment account to provision for expenses account. So in Tirupati consignment account, debit side we posted. In provision for expenses account, credit side we should post one. Credit side on 31st December 21 by Tirupati consignment account amount 300 rupees. When expenses are incurred on 5th January 22. So on 31st December 21, first we have to close this account because 31st December 21 is year last date. Close this account. Credit side total is more than debit. So debit side balance carried on comes from 300 to balance carried down on 31st December 21. Two sides put the totals 300 and 300. So for next year it continues. Debit side balance carried down, you have to bring on credit side. Credit side, next date of this date, 1st January 22 by balance brought down 300 rupees. Now, on 5th January 22, bank charges 300 rupees incurred. So once you recollect triple column cash book, in triple column cash book, credit side, in bank column, on 5th January 22 by bank charges 300 was written. So what is the entry for this? In bank account credit side we wrote bank charges. Entry for that is bank charges account data to bank account 300. Next, bank charges is one nominal account now. Expenses, losses, incomes, gains, nominal account. So nominal accounts are temporary accounts. We have to close them by transferring to trading account or P&L account. Here, for this bank charges 300, in previous year, that is in 2021 year, we created provision. Therefore, by transferring this amount to that provision, we have to close this bank charges account. So by debiting, we created bank charges account. If you want to cancel, you have to credit now, but to bank charges account 300. And how you are going to close? By transferring to provision for expenses account. So this is a journal entry to close the bank charges account. Now provision for expenses account we are preparing. That account is debited. Therefore, on debit side we have to post. What to write in particulars column? To bank charges account. When we are closing on 5th January 22, write down the date. To bank charges account. Amount 300 rupees. So two sides totals are same. Therefore, put the totals. Thus, provision for expenditure account is closed in next year on 5th January. Next come to bank account. Bank account. See, these two entries you have to remember related with bank account. When this due amount is received from Murali on 5th January 22. So you have to show this bank account from this date. On this date, when check came from Murali, what firm does, what consignor does? So he deposits that check in his bank. His assumption is on the same day bank collected money credited in his account. So bank balance is increasing. Therefore, on that day he writes this entry, bank account data to Murali account. Once you recollect Murali account, in Murali account we have calculated this amount. We posted this entry also. So this entry now appears in bank account. Which side? Bank account is debited. Therefore, debit side you have to post this entry. 5th January 22 to Murali account. In question is giving that this check is credited by bank on 9th January 22. On that day, bank collected check amount from Murali and deposited in our account. But when we deposited check into bank on 5th January, on that day only we assume that our bank balance is increased. So that is why we prepare BRS now. So consignor thought that check amount was credited on 5th January because on that day he deposited into bank. But a bank credited that amount in our account on 9th January. So in bank's books they record on 9th January. In our books, nothing but in our triple column cash book, we record that on 5th January only. No? Therefore, on that day only I am writing this entry. So in bank account debit side we have posted. Come to bank charges. So while preparing provision for expenses account, I explained this entry. Now this entry also you have to post in bank account. Bank account is created, therefore credit side. 5th January 22, debit account name by bank charges account 300 rupees. Find out the balance. When not on 31st January 22, because in January month only up to 5th date we are showing bank account. After that also transactions may be there. So balance we show on 5th January only. Debit total 1,97,530 minus credit amount 300. So remaining balance on 5th January is 1,97,230 rupees. For that, write down by balance carried down. Put the total here. So with this, present problem is completed. Hope this video is helpful to you. Thank you.